Hey guys, hope you are all having a great day today. Today the man, the myth and legend Jerome the Joke Powell spoke, and the market went berserk. As we have said in the last couple videos, market is gonna rally until it doesn't. In fact, I bet on this today, which by the way, before we go over all the news that are coming out, let me show you how solid green we were today in the Discord. For those that don't know, we day trade in my Discord and I issue alerts of when and what to buy. We play SPY and we absolutely destroyed it today. We rode puts all the way down and got in on calls at the perfect moment, riding it all the way up. Here is a list of all my personal alerts as well as my proprietary Discord bot that also alerts what SPY contracts to buy. The success and profitability rate on these speak for themselves. Just wanted to throw this out there for you guys. Come join us already if you are interested in participating with day trades. Also, come follow me on Twitter for constant updates and takes on news as they come out. So, let's talk about today, because Jerome Powell spoke and the markets rallied, yet what he said was nothing new, it was nothing we didn't know and all the details he mentioned were known, expected and heavily discussed to death by now. The real reason the stock market went up is the simplest reason of them all, strong direction. As we have said over and over, what makes the market shaky isn't bad news, it's uncertainty. When markets are uncertain of what is going to happen, it tends to reflect in bearish price action, but once a roadmap is established, markets then begin pricing in value much more confidently, and today was a reflection of such phenomenon. So, many have been asking, was what Jerome said bullish or not? In my opinion, it wasn't bullish, and I have evidence to prove that this bull rally is not really sensical. What Jerome Powell did was appease the markets by reiterating what has been said in the past, which gave investors more confidence in the Fed and their ability to navigate things through. Powell signaled the Federal Reserve will be slowing down the pace of interest rate increases next month, while also stressing borrowing costs will need to keep rising and remain restrictive in nature. He cemented expectations that the Fed will raise interest rates by 50 basis points when they meet in December 13 and 14, which follows 4 straight 75 basis point moves. He said, and I quote, "The time for moderating the pace of rate increases may come as soon as the December meeting. Given our progress in tightening policy, the timing of that moderation is far less significant than the questions of how much further we will need to raise rates to control inflation, and the length of time it will be necessary to hold policy at a restrictive level. The Fed's action have lifted the target range of their benchmark rate to 3.75% to 4% from nearly zero back in March." Powell said rates are likely to reach a higher level than officials estimated in September, which is actually quite a bearish stance. Those projections will be updated at the December meeting. Investors have begun speculating the Fed pausing hikes in the second quarter once rates reach about 5%. Traders expected rate cuts later in the year, but Powell said a reduction isn't something the Fed wants to do soon. He mentioned in regards to rate hikes that the Fed thinks that slowing down at this point is a good way to balance the risks, forecasting 12-month inflation based on its preferred gauge, the Personal Consumption Expenditures Price Index. He warned that there hasn't been enough strong evidence to make a convincing case that inflation will soon decelerate, marking that it will take more evidence to give comfort that inflation is in fact actually declining, a big point I mentioned yesterday. Lastly, he said that the trust is that the path ahead for inflation remains highly uncertain, adding that despite the tighter policy and slow growth over the past year, the Fed has not seen clear progress on slowing inflation. Let me repeat that again, because this is the most important point. The Fed, even with all the 75-point rate hikes they have issued, said they have not seen clear progress made on slowing inflation. It does not get any more clear than this, but once again the market wants to do its own thing and rally to the moon based on a simple decrease to 50 basis points. So where exactly does Wall Street stand with this? Well, nothing changed at all. There was no particular set of news that came out that we didn't know about. We have known they wanted to push 50 basis points, which is why all benchmarks have been going up for the past month, but how exactly do financial institutions feel about it all? Well, Bank of America and Citigroup recently came out and said they are not sitting pretty. Citibank warned that as they surveyed the prospect for the global economy, they see many reasons for concerns, including challenges from the pandemic and the Russian-Ukraine war, high inflation and headwinds from the central bank. Reflecting on these factors, Citibank believes the global economy is likely to endure rolling country-level recessions during the coming year. They believe the Eurozone and the United Kingdom will enter a recession by the end of this year, with the United States entering a recession by mid-2023. The full impact of higher interest rates from the Fed is yet to be truly felt by both consumers and businesses. Bank of America CEO Brian Moynihan said that he is expecting a mild recession in 2023 as well. So where do we stand now? With the midterm elections firmly in the past, the S&P 500 should enjoy a rally or at least, more and more bullish outlook for the coming weeks. Remember, it is all about proper expectation and less uncertainty. Clearly the market now has a strong direction and sense of calm, which will result in stronger price action. It will be next year when earning reports for the holiday season come out that things will begin to unease. The full impact of the rate hikes is also yet to be felt and will have pronounced impacts on the stock market. That is why I believe nothing changed but price action should feel stronger in the coming months, which is what we have been saying. Anything too great will heighten inflation, which will make the Fed's job impossible, and they could raise rates again, which will sink the markets. This means recovery will be long-lasting and painful. Lastly, I want to talk about the housing market, which we haven't touched on for quite a while. Based on the analysis of much more knowledgeable experts, it appears that there is confidence in the belief that the housing market will see negative growth as a result of future Federal Reserve interest rate increases that will raise rates even further. Some experts expect housing prices to fall 10 to 15%, with the housing prices accelerating on the downside. The median sales price of a single-family home in the U.S. would drop from its second quarter record high of $440,000 to just under $375,000. Pantheon estimates that existing home prices will keep falling, ultimately dropping by about 20% from their June peak, while Goldman Sachs analysts also recently cut their outlook for home prices from roughly flat next year to down 4%, noting that unsustainable levels of housing affordability to continue weighing on housing demand. Be very careful and wary of anyone telling you that it is the perfect time to begin buying the dip in the real estate market, because truth be told, everyone is running to cash out. Wanted to address a couple of things. First yes, I am still bullish on GameStop and AMC long term. Nothing has changed that. I keep getting a lot of concerns from viewers who question if I have simply sold. Let me state again for the 100th time, I am not selling at all until we MOAS, and I am perfectly fine riding these stocks down to zero if need be. The reason why I am not talking about these as much as before is because there frankly isn't a lot to be talked about. APE units fell under $1 in valuation today, which is absolutely horrid. I personally didn't like their implementation whatsoever, which I was very transparent with you from the get-go. None of the things all these other AMC pumpers promised came to fruition. We didn't get a massive rally like last year, nor did we even get a share count to prove synthetics, which I said would never happen in the first place. Even the very purpose of APE shares, as stated by CEO Adam Aron himself, has failed, which was to raise money to help them get rid of debt. It seems like APE was implemented a little too late for that to happen. I still believe AMC has chance to MOAS, don't get me wrong, but APE in my opinion severely limited its potential. It added nothing to us as investors, and now with the price tanking below the dollar, it is only time before AMC is forced to take some type of action to do something about it. I saw that AMC Networks is facing seriously financial challenges, and I believe AMC is in the best position to acquire them. Not only will it help them boost their dead streaming service by adding a great catalog of TV shows like The Walking Dead, but it can also serve them to transition into merchandise. We know AMC executives like their CEO Adam Aron have talked about merchandise being sold at theaters. Imagine how much more they would sell if they had rights to sell Walking Dead clothing and prosthetics along with the other billions of things they can make money on. Remember guys, the real money in these franchises isn't on the ratings and commercials, it's on the merchandise. Star Wars makes the most money selling toys and shirts to kids, not getting you on a theater, though that might change with video games and microtransactions, but still, the point stands. AMC would do significantly well to begin position itself to acquire them, add their properties and make it a sound investment for once. GameStop continues to trade as it should, holding pretty well off. Nothing particularly interesting has come from its price action in recent days, and as such, there is little to nothing to be discussed. I hold my shares close to my chest and will not let them go. As soon as there is something to talk about, trust me, I will be the first one pumping out a video on it. I will never stop covering AMC or GameStop until they bust or moon. That is the promise I have made for you guys since I made this channel, and I will always follow it through to its end. There is just more stuff to discuss outside of meme stocks at the moment, and I love a more diversified channel than a centric one. And that pretty much wraps up everything I wanted to go over today. I will see you all on the next video. Thank you so much for watching this short update. Also, seriously, do take a moment and come make some money with us in my Discord. Our alerts are incredibly accurate and I want you to make money while we wait for MOIS to take place. Until the next video, I wish you all an amazing rest of your day and to the moon.